Welcome back, YouTube. So, one of the most controversial topics that has been coming up over like the last day or so is this market rally going to last, or are we still projecting a recession or pullback in the macros for this year? And I wanted to bring this up because there is an indicator that I spoke about over the weekend with my group, but I felt like it's very important to share here as well so that we can take a look at the macros because sometimes when it comes down to crypto or even stocks, a lot of times we get caught up in like the micros and just the price action and candles. And we forget that ultimately the macros influence that on a much bigger level here. And I wanted to just kind of go over some probability and projections that we have for this year. And then we'll take a look at the charts and ultimately what that means for price action. So this here is pretty much the effective federal funds rate S&P 500, and they take some um, averages between like bonds and stuff like that, treasury yields, and they get a percentage. And I'm going to read to you like this excerpt so you kind of get some context. But it says, for the past 64 years, the Federal Reserve Bank of New York has used the treasury yield spread between the 10-year bond rate and the 3-month bond rate to calculate the probability of a U.S. recession occurring within the next 12 months. Over the over these 64 years, the probability of recession has topped 25% a dozen times and 40% on 8 occasions, with the exception of a peak probability of a recession of 41.14% in October 1966. The New York's Fed's recession forecasting tool hasn't been wrong if it surpassed 40%. In other words, if the New York Fed's recession probability indicator surpasses 40%, we've had a recession within 12 months without fail for more than half a century. In December 2022, this recession probability tool hit 47.31%. This is the highest reading since 1981, and a very clear indication that the economic activity is expected to slow at some point in 2023. And here's an example of that chart. And pretty much us kind of like exceeding the 40% mark here. So pretty much we have two things to kind of look forward to with this tool. I'm going to scroll back down to the chart. So we can either this tool is going to be correct as it's been for the last 50 plus years, or B, we're going to break trend and we're going to have something unique and we're starting the bull run early. Now, is it likely that this tool is wrong? I'll say that it is unlikely that it's wrong. We're probably going to have some pullback, some slowdown here this year. We're due, even with Bitcoin, stuff like that, we're due to kind of start our ascend around December. That's typically, if we're keeping up with historic patterns and stuff like that, that's typically when the official bull run should kind of take place. But that doesn't mean that we can't consolidate or have a higher high or anything like that. But that's technically, historically, that's where we should kind of, the time frame that we should kind of start taking things off. Another thing to note that's very important is come March, that'll be one full year that we went without QE. So it is very likely that we can see some just contracting in the economy, because we're also going to start to get some year over year in the real estate market and stuff like that we're pretty much since the peak, because we kind of peaked, I think, last April. So we're going to start to get some of those year over year numbers, and they're going to be really ugly. Just kind of projecting what those the fall really from the height of the turnover and the ability that people were able to take out mortgages and interest rates and stuff like that. These numbers are going to be nasty when we start getting those year over year numbers this year. So that can kind of set some panic in the real estate sector. And we can certainly see a macro, panic almost, and start to see some institutional money and stuff like that pull out and start allocating money into either bonds or just kind of sitting on the sideline, holding cash until, we get toward a bottom. So the question is, will this market rally last, or are we likely to see a recession? In my opinion, we certainly are likely to go, because I believe we're already in a recession, but I think that we haven't hit the bottom yet, and we are likely to see a further breakdown in the economy. But that also means that this is very important here to as far as for price action, we're looking at things like crypto and stocks and stuff like that. Depending on the level of the recession and how much money gets extracted, that ultimately determines how far we're going to see like a pullback in the market. So if we do establish those higher highs and we establish support there, possibly we can not have a deep recession. That's still a possibility. We'll see. And we can just consolidate back down to some of those levels, or this could just be an extreme recession that everybody is underestimating, and then we could go and test some of those extreme lows. That is TBD as of right now. But the important thing is that we are compiling the information and planning ahead. I'm going to switch over to the charts here. We're going to take a look at that because technically speaking, Bitcoin correcting a full 85%, that means that we can see something like 10 grand. But if we go up here and we establish this support and stuff like that before we start seeing this breakdown, because the chart, we hit that number in December. So that means anytime between now and December, we're expect to see a slowdown in the economy. So technically we can hit some of these higher numbers and have a decent floor here. It doesn't mean that we have to go barreling to hell in the stock market. So we could see something from like a 25 or so and have a consolidation back down to, the 20 mark or 21, 22 mark, depending on that price action. Doesn't necessarily mean it, or it's indicative that we're going to fall all the way down to 14, 15, or 10. But it's also not indicative that that won't happen. It just depends on how severe the recession is. So this is something to kind of keep in mind. Same thing here with Doge. We can have the consolidations up here. We can come to 11 and have establish like in a floor here, have come back to around the 8 range or even the low 7s. Doesn't mean that we're going to go back to 4 and 3, but doesn't mean that we're not. That also depends on the aggressiveness of this recession, and you can't time these things. So this is why, as an investor, if you're trading or if you're playing it positive, negative, you have to just kind of be aware of that to put yourself in the most likely position to be profitable, especially if you're trying to trade it. So just certainly be careful with your entries there. Long term, I know that kind of the short term kind of matters a little less, but ultimately, entries and stuff like that, coin count, that's just something you want to look out for. But this means that we're not out of the woodwork just yet for the macros in the economy here. So obviously we're going to have to do things like monitor CPI going forward, keeping track of the economy, start looking at those year-over-year numbers that's going to come out in real estate, and then of course price action. So the main focal point is to not confuse micro with macro, because sometimes people focus so much on micro, you would think that it's going to have a macro approach to what's going on over in the economy. Candles, the volume, all that kind of stuff like that, even some of the news, all that matters greatly. But if you're going to have a sustainable bull run, you're going to need your macros and your micros to align, and then you can have a smoother transition upward. But ultimately, this is kind of going to be like this test here to kind of have like this yo-yo to see where we're going to bottom at officially, and then we can start building out from there. But price action wise, everything that we're seeing right now is beautiful. We're just going to have to see where some of these candles close on the short-term time frame. We still have another 24 hours roughly. And then we can have some official readings on the short-term time frame. So that's going to be great. But ultimately, long-term, we're going to see where these consolidation points lead us. And that's why we're looking at this on the short term and to see where we're going to build strength at on the long-term time frames. And then we can kind of get an idea where we're going to settle if and when we have that slowdown in the economy. So that is my update on the economy and the price action for the coins. Hit like, subscribe, share the video for more. If you want to hear more from me, of course, you can do that. And we will see you guys tomorrow. And also don't forget to check out the description section where I have a link for Moomoo, and you can get up to 15 free stocks when you open an account. Thank you, and I will see you in the next video. Try.